Test 1, 2. Oh, yeah. I know you guys can hear that. All right, so we're going to remove that for now. I had it working on my computer, so I'm not really sure why it's not relaying in the software that I use. But that's all right. Let's go ahead and kick things off. All right. Can you guys verify that you can hear me in the chat, please? Nice. Okay, so we've got everybody that can hear now. So we're going to go over a couple of things from this past week. We did have a couple of surprises, to say the least. The news was not quite what we expected from last week's outlook. We expected CPI to give us a nice banger going after some consolidation underneath and trying to break out of this consolidated mess we've been in since the year started. I'm going to remove that and remove that and make that smaller. All right, and then we're going to do the giveaway, of course, like we do on Sunday nights. Tonight, I think we're giving away a $25,000 funded account challenge with Osprey FX. And then next week, we'll do another funded giveaway with My Funded FX, which I'm really gaining some traction. I really like them. I think they're going to come out of the woodworks and do a lot of really cool stuff. All right, so let me share my screen. And if you guys can let me know that you see my screen, that would be excellent. Share screen. All right. Can you guys see my screen now? Awesome. Thank you for letting me know. All right, so let's start on the day chart for the Euro USD. And let's kind of take a look at the week and then kind of what we're looking like. Last week during our segment that we talked about them reaching for these highs just above the 7865, where we thought we would see a reversal. We thought we would get that during CPI. Well, we didn't. CPI went down. Euro USD went down, and then it kind of worked its way back up. Now, we did end up taking that level, as you can see here, on Thursday for CPI. Friday, we kind of creeped down a little bit. We're still kind of hanging this level of equal highs here. This is the daily chart. We have this level of liquidity that has just been built up here literally since last April, by the way, is kind of the last time we had a good look at this. And so now we've got all this liquidity built in this area, all these stop orders that are built here. We also took some liquidity here. We've left behind. Now, this is kind of the nervous part when we talk about the U.S. markets as a whole. It's my nervousness has went a little bit higher because we did not do this week what I thought we would do, and that gives me an indication of what I think they're going to do. And I'm gonna be honest with you, I think it's a grim outlook. So anyway, we got these equal highs here. We're not going to stretch quite to this level, not just yet. I don't think they'll yank it up that high quickly. I know they'll go after that level soon. I think we've got to work our way back. The reason I think we got to work our way back is we've left behind a ton. This level here didn't breach any major liquidity points. Now, when you go into the smaller time frames, it clipped a little bit of liquidity here, right? But this major, this daily area here, we've left behind a chunk of liquidity. And I mean a chunk of liquidity. These areas here have not been breached. And so there is a significant amount of liquidity for them to go backwards on the Euro USD. What I think that we've got some potential in seeing right now in the current market is, you may notice that I have this blue box right here. It was a little smaller there, but this is the likely play for the week. Is something to here, and then to here, and then I think we'll go here. Okay, so something like that is going to be my outlook on Euro USD. Now, remember, I don't just jump in trades. I trade time frames based on current price action. So what is the price action showing me? So this is I can see them coming down, and when I go down to the hour chart here in a second and show you guys a couple things, you're going to go, oh yeah, that makes sense because based on the way I trade, right? I'm going to be looking for something to go down and target the sell side liquidity on some lower time frames. Let me expand this chart out a little bit, and you'll see this zone that I have drawn here. This is that blue box that I showed you. There is a ton of liquidity right here, a ton. And so hence the reason you heard me say, I think we'll go down and then up and then come back down. I think they'll come back after this liquidity into this imbalance area here. They may, and I would not put it past them because of the amount of imbalance in this area here. They could come back even to this far. And then after that, I'd be looking for buy opportunities. Right now, I'm looking for sell opportunities that show in the price action. But you could see something like this. It wouldn't surprise me for them to come back to, let's go on up a little bit. It would not surprise me for them to come back into, let's go, boom, boom. So to me, I could see them coming back somewhere right here. And I'll leave these on my chart, by the way, so we'll kind of see how they play out throughout the week. Let's do that in like a pinkish color. Okay, and so that would be an area that we could look at possibly targeting. We could also target this area here. So I would say probably somewhere in that zone, we could see a bounce. So if we get price action moving down into that direction on the lower time frames to come clear some liquidity, I'd be looking to come down into that zone before a bounce going up. So somewhere, between our blue box and here. I know we can call them zones, we can call them whatever, but I'm looking for this to come back and rebalance price from this area while taking liquidity. That's what I'm really looking for. And so that's the Euro USD outlook for the week. I think that's kind of what we're going to get. I wouldn't be surprised if we make a low tomorrow, being a bank holiday. We'll most likely see the low come in. We may see some pretty good action during London tonight, but most likely the low would come in on Tuesday since we're on a short trading week this week because of the holiday in the United States. I believe it's National Do Nothing Day or National Nothing Day or something, which is just baffles my mind that we're at that point. But I want to take a look at a couple of the American markets because I think we're kind of getting to a point to where it's really, really, really important to start talking about these moves that are coming. So let's start with let's start with the Dow, and let's go to the daily chart. And so what we expected from CPI last week was for them, if you guys remember, we thought that they were going to come up first. Remember, we said we were going to come up into the zone. From this area, we were looking for price action to come here and then go here. That's what we fully expected to happen. Okay. I called it last week. I said we're going to go up into this zone, this imbalance area. I thought we would clear some liquidity, and then I thought we would quickly move back down coming after this area here I had drawn out last week. And this area here. Those are two key areas that we were looking at on the Dow to come back and clear those zones. We didn't get that. We got a direct move up. We had just a little bit of pullback on Tuesday. And this is the nervous part. This is where the nerving comes in about the U.S. markets and where I think we're going. I'm going to hop out to the weekly chart. We've been talking about the Dow potentially making a new high before we get a pretty tremendous fall, kind of being played out in the media, right? Because you guys hear me talk about, the media manipulation behind these exact kind of things. We could see them break this high. Now, this is possibilities because, like I said, we're checking in on current price action. Let me see, because somebody might not be able to hear me. Yep. Yes, we are live. All right. So this is the possibility, right? It's from here to here to here. Because remember, markets don't move up or down. They move in areas like this. Up, down, up. That was awful. Up, down, up, right? That's how markets generally move. and then once they make a move here, they here. You see what I'm saying? So they move jagged. Right now, we have a direct vertical move, which looks to be a liquidity run. The question is, where's the run going to go? They could take if they take this liquidity here and move back down to this area for a bounce. I can see that happening, but I really feel we have a first quarter shift coming that's going to be pretty dangerous for the markets as a whole. Because remember, my overall tendency on the market and thought process for the year is we're going down, 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 right? So, but the sentiment with the media and everybody else has been recession, 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 rather than shoving it down our throat, shoving it down our throat. We talk about this every week. So this past week, we got a little trickery. We thought CPI was going to be that used, but we have went vertical. Remember, this is a weekly chart. So for 2, 4, 6, 8, 10, 12, 14. So for 16 weeks, we've been pretty hard going up. Since they started pushing a recession narrative in the media, people have been absolutely, when I say people, I'm talking about elites, people that understand the way markets move, professionals, have been absolutely crushing the markets, right? Everybody last year took this big fall, right? They took this, massive fall, 30, 35%. Some people took in their 401ks, things like that. People were panic moving money. So when they started pushing this narrative of recession, 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 it was about right here with the first one. And it got even more heavy when the media started pushing the narrative here, right? And you notice the markets are working upward while the media is pushing fear, right? So this is giving professionals and longer term traders time to, number one, get even from the losses that they occurred last year. Number one, because remember, we have balanced price, right? So if they were buying here and buying here, they're above their break even at this point on these moves, knowing that we're headed back south, going back, down. What we always hope for is we hope for more time, right? From a middle class perspective, we're hoping for more time. Well, it doesn't look like they're giving us that. It looks like they're running this thing up pretty quick, expecting a heavy fall. So we could see a new high. We could definitely see this level get taken out here, which is about where we are now. That's what makes me a little bit nervous. And I'll show you on the other charts why I'm equally as nervous looking at the other stock markets here in the US. This level here and this level here, right? So these are levels that we're watching and we're starting to knock on the door of these things. So if we start seeing a narrative when we get a breakout here, really pushing back into that 35,000 zone on the Dow, if we start seeing that media narrative be shoved down our throat about, oh my goodness, the market has some way fought its way through these recession thoughts and, we're breaking out finally again, people are going to start buying. And it's no better time than to drop the hammer than that. They want to get they're going to push it for a couple weeks, enough time to really get the media narrative built in. Remember, social conditioning takes a little time. And I'm just worried about some world event. The market's just going kaplooey on us. And so, like I said, I was hoping for more time, but they've really made an aggressive push. Even last year's push, I wish I had in this program, I wish I had a way to annotate. Like in Zoom, they give you an annotation tool, but I don't think I have that here. I don't. So, but last year it was kind of up, down, up, down, up, down. Well, look at like the last, really, the 2 of the last 4 months, it was an explosion up. And like I said, it's almost like they're coming back either for this area to make a new all-time high to where the media is going to push that narrative of, we're finally made it out. We're pushing through this recession. We're getting through it as a country to sucker people to get back into the markets to take a massive hit or a massive loss. What we really did is on the monthly chart, we came back into this order block area, right? That had some imbalance. And now we've rejected that zone. This needed to be used up before a bigger move down happened. Okay, that's the way the markets perform. That's the way we trade them. If you haven't, you're not a part of my Discord or seen, any of my trainings, you understand we trade order blocks, imbalances, things like that. So they needed to come back in and clear this out before the bigger move down anyway. But my narrative remains the same. I hate to be the bearer of bad news if this is your first time watching, but this zone here, it's about a 60% loss in overall market value from where we're going to be. This is my target. When I see the time is right, this is where I think that we will begin to start working our way down towards. Volume in December was bad. Volume in January has been as bad as well. Um, but you can see we came out of this zone. So this zone here, pretty well used up. So my narrative is this: here, here, we're going to just watch price actions. We're going to see if we make a new all-time high or whether we take these highs before a push down. It just makes me really nervous that we're this close, even though I know it's coming. I don't, I've never been in a situation like I think we're going to step into in my lifetime. A matter of fact, I don't know many people that are alive that have been into a situation that would be similar to 1929. But and I hate to be the guy that really calls it like it is, but this is just what I see. If price action meets what I believe the narratives are pushing towards, this is what we're going to see. Um, so just find ways to prepare yourself, prepare your family, because I think we're getting inching closer and closer to the zones that really um, are going to allow them to start pushing that media narrative. That's going to take. It's not going to take much time for people to start shoveling money back in the markets because they're seeing their 401ks starting to turn around. The people that left them alone and have just kind of ridden out the quote unquote storm, not really knowing the big storm, in my opinion, is up ahead. But this is what the Dow is looking like. But I want to take you over to the NASDAQ really quick because this is something that is super important to me to point out. That was definitely the wrong direction. So here on the daily, on the NASDAQ, the narratives really do fit pretty similar to the same. I'll go to the weekly really quick. If the new all-time highs happen, it gives them an opportunity to come back and take these levels in the NASDAQ segment as well, right? So going out to the monthly, you can see where they kind of left that open. We have some relative equal highs here. And we've talked about this on the annual review and on all the weekly reviews, that these were kind of the target areas that we saw. Now, what has happened? What has happened since we've last talked? We said that we were going to come back and look something in this range. Came back last year. We bounced out of this imbalance area, right? We broke through the first touch here. So pretty much this was the equilibrium of the move. This would be what we call, and these fib levels, by the way, it's crazy how these things work, but they come back into this what we call the optimal trade entry from this overall push up. Pretty crazy how that level bounces there. But what they did is number one, they come back to this order block area just like we talked about. They made a slight significant bounce up. Okay, that's how that zone performed, or that order block area. Then they come back and they took out this low, this liquidity purge here, inside of this imbalance area, right? So all this was kind of has been kind of working in the favor of rejecting price on up, but it needed to be used up before a bigger push down. My narrative here also remains the same. There's a lot of liquidity that's been left behind. They swept a pretty good bit here in the NASDAQ. They swept here and they come in, they balance price here. They come back, they swept this move before the move up. And remember, this is the monthly stuff. Going back out to the weekly stuff, kind of where do you see your equal highs, equal lows? Where are the big liquidity pools? Where are the zones at? So if we're talking about that same 60, let's go back to the monthly. If we're talking about that same 60%-ish move from the 15K area, we're looking at somewhere about 6,000, which would be down here in this breaking through this order block here. So we could get all the narratives are beginning to line up for what they need and how the markets move, right? So would be my expectation would be either into this area, and we've talked about this each week, is we're going to watch current price action on the NASDAQ. It could push up even as high as into this and taking out this liquidity here. Also, there is a slight level of imbalance in that area that has not been filled yet. So it would make sense for them to come in and just barely snip that liquidity over the next 3, 6, 8, 10 weeks, whatever it boils down to. Just continue the aggressive move up, take it out, and then further the move down. So these are just outlooks, right? These are just based on what I can see, the way the media is talking to us. I don't watch much news, but I catch enough, Bloomberg, things like that, to see kind of what the narrative they're pushing is. And so this is what I would be on the lookout for with the U.S. markets. If anybody wants me to look at anything specific, just comment over in the chat. And then also let's go look at the dollar. We have opened with a wicked gap here, by the way. Wow. That's interesting in itself. Okay. So it's not unusual. Happens quite a bit, but it's a pretty wicked gap for the dollar. See, we opened with a gap here too that was never filled. So this dollar is really aggressively moving downward, and you kind of need to, because guess what? The expectation is let's go pull some liquidity out, and this would kind of follow the same sentiment as the market, because as the markets are moving up, right, the dollar is normally going down. The American markets, I should say. And so with that final push up, this would also match coming down. If our markets are going to push up and meet the narrative, they come out, they sweep the liquidity, right? Somewhere down into this area here, maybe even down into the order block, somewhere down into here. And then as the US stock markets fail, there you go, a push back up, right? As our dollar would strengthen. Pretty wild and wicked how these things work. For sure. And so going out on the monthly, you can kind of see this is kind of where the dollar is falling at the moment. We've had a big push up for a very long time, right? So literally since January of 2021, we've had a pretty significant push up. And so this is just a correction. That would make perfect sense. Let's also go back and let's check. Look at these equal lows down here. This is something to think about long term. That is definitely something to think on. I don't take a look at the monthly charts very often, by the way. That would obviously match our same sentiment, right? Coming down into this area would obviously match the optimal trade entry that we like while clearing out this imbalance area. What is the time frame for the large of a drop? Dow 35, 16 weeks or months. 1,000 a week would be 4 months, expecting some 10% days. Just opinion. No, Zach, Bud, what scares me is my thoughts always go to the amount of correction that we need based on the price action that we see and the amount of liquidity we're leaving behind. I mean, yes, we can theoretically think of, what would that drop look like? My vision for that drop is they're not going to give people time to prepare. My vision looks something like the pandemic in 2020, but way deeper into the market. It'll take some significant world event to trigger it. And yeah, I mean, I think it'll be fast. I think it's going to be fast and swift. I don't think our markets are going to come down, hopping back over there. I don't think our markets are going to come down looking like the jagged edge. I don't think we're going to come down like this to here, to here, to here, to here. I don't think it's going to look like that. I honestly think it would look something pretty significant. Something to the effect of a large move down into here, rally maybe just a hair, and then some form of secondary. I think this rally would be really short lived, something like this, even, right? I don't think we're going to have a lot of legs to it. I think it's going to be something quickly, and I think it's going to be swift. They're going to really need to come down and sweep into this. It's going to, like I said, I think it'll take some world event. So that's just something to keep your eyes on is world events going on. Taiwan. Remember the stuff with Taiwan and China has been going on for quite some time. It's been settled for a while because the Russian narrative has played a little bit better. They've been building that social conditioning with Russia pretty heavy, but the China-Taiwan thing makes me a little nervous. There's things going on with BRICS that makes me really nervous as well. For those of you that don't know what BRICS nations are, it's pretty much NATO, right, for other countries. Brazil, Russia, India, China, and South Africa. Yep, that's it. That's who makes up the BRICS now. But I know that there is an expansion on the horizon, right? And so keep an eye on a possible BRICS expansion. That would really put a dampener. War with Russia, obviously, is kind of the obvious thing to keep an eye on. But these kind of world events are what President resigns. That narrative is like shoving it down our throat right now, right? So absolutely as a world event, 100%. I don't know if it's a market crashing world event, but I think it's something that could obviously feed this first leg, right? and kind of instill that little bit of panic, and then we get like a slight push up of like, hey, the U.S. is going to be okay, right? And then they play the narrative, oh, other countries are trying to take us to war now because they think we're weak, right? And here comes the rest of it. I mean, it could be a series of world events, and something like that could definitely lead into it. So yeah, any kind of major world event, and obviously the president of the United States resigning. Um, I don't remember what happened when Clinton did it. Um, let's see, when Clinton was impeached, like officially. Um, that's a good point, and we got just a minute before I want to do the drawing anyway. So I want to pull up a chart over here. The charts in my MetaTrader, I don't believe will go back that far. I know charts that will. So I'll sling this over to the screen over here. You guys see that? Nixon, absolutely. Yep, that was 84. Watergate, for sure. Let's go to the monthly chart. And well, that ain't gonna work. Let's see. Dow Jones. So there's the monthly. We can go to 12 months, look back in the 90s. There's 50, 58, 77. I don't know. Markets didn't seem to react negatively there. What was that 96? Is that when Clinton? I gotta forgive me. I guess I'm a little bit young because I think I was 98. I was close. I said 96, right? So no, 98. The market rallied pretty good in 98. So it was December 19th, 98. By the way, December the 19th, 1998. Let's go to the 6-month chart and look and see. All right, so 97. This is so the first half of the year. That was pretty tough. Now, first half of the year looks to be a down push inside that area. So let's see. Happened in December, so it's going to be right in that area there. If we go to the monthly chart, we should be able to see a little better there. Yep, here we go. So Clinton was impeached December of 98, which is here. No, markets rallied up. That's funny. So I don't know. When you look at past precedent, the last impeached president, or the markets actually rallied after he was impeached in December. But then, of course, we had that major correction, right? 99, 2000, 2001. So it's almost like there was a manipulation phase there. So, yeah, for sure. You can actually see what I consider manipulation, right? Which is accumulation, right? They accumulated, kind of consolidated for a month or two. And then you got the manipulation, the fake move up, and then the real move down, right? So here's that fake up, and the real move came down. So there's the manipulation move that went up. I'll scroll in so you guys can kind of see that a little bit better. So this is the accumulation where we'll call it the elites, the professional traders are accumulating position, knowing what's coming, right? And so here's where they brought the markets down. That's a pretty significant drop. I mean, here we top it at 11.5 and drop down to 7,200. It's 30%, 30, 32, 33% there of a drop. That's pretty hefty. Pretty hefty. All right. Does anybody want me to look at anything specifically before we move forward? So that's kind of the weekly outlook on the dollar and the Euro USD. We've kind of looked at those. Pound dollar should follow a pretty close to what the US dollar is doing, except I think they've already done a pretty good liquidity sweep on the pound dollar, right, into here. So the manipulation, I guess, so to speak, would be to come back into this, possibly this order block here before making a push down, while the Euro USD is going to sweep that area. You could see this move here. I could see this happening this week, by the way. So we'll be keeping an eye on this for a push down from the pound dollar. Why? Because there's just a ton of liquidity back there, right? So this area here has not been swept here. We got this block here. Be something to look at. coming back from the optimal entry. Oh, look right there where I drawn. Right beyond that optimal entry would be kind of a pretty good little push down to me, because you got a nice little. That wasn't supposed to happen that way. So you got this nice little imbalanced area here, right? Sweep liquidity before it kind of matches up with everything we're looking at with the dollar, and the Euro USD as well. So, something like that, probably a push up this week and then, push down. So, all right, y'all ready to do a drawing? Let's pull it up over here. Log in. So we have today. I'm going to, it has a ready to award, but it shows personal info. So I'm going to kind of slide it over here. I'm going to click on the ready to award button. And there's your winner. There is your winner for the week. By the way, 8 referrals. Great job. By the way, the more referrals you send over through the system, it gives you more entries into the drawings. 45 total entries. Impressive. Here's a winner for the $25,000 funded account challenge giveaway. And then I'll just get with me, shoot me a message inside of the Discord community and let me know, and I'll get your challenge set up. Next week, we're going to do another $25,000 challenge giveaway, but we're going to go with My Funded FX. They're coming with some rule changes they just released this past week. Pretty cool, by the way. Pretty cool rule changes. So I'm pretty excited about that. It's going to really allow it. They've lifted the 30-day time restriction, which to me is the toughest rule to follow. So also this week, really quick, here is an updated where we are on the new account for 2023. Up 16.52% overall. This past week, we did just over 5% last week, I believe it was. I haven't made the trade, so I guess it doesn't show, but I know we're 16.53 for the pretty nice equity chart, by the way. Pretty consistent growth. I really like the way our equity curve is looking. We got off to a pretty fast start because there was some positions that popped in. I'm pretty excited. I wasn't excited to lose 4 or 5 in a row, but it was all me. Plain and simple. The price action was there. I pulled the trigger, ran into a little manipulation. We call it the button push. I even posted about it on Twitter. I said someone just pushed the button because you could tell it was a manipulation run against what the algorithm would normally show. But I really want to long the market. 91% wins in longs. Pretty good profit factor. Pretty proud of that. Shorts, we're going to have to do a little bit better shorting. And that's really been from that aggressive push up, watching for that liquidity snag and pushing down. I took a couple of trades that showed and all the rules were met to my, the way I trade. But the biggest thing is just cut your losses quick and hop out and, go try to dominate from there. So any questions before we hop off for the day? I'm going to be posting tomorrow the next drawing link for everybody to be able to get in the next drawing. The second thing is I'll be posting tomorrow about the people that I have already selected to personally mentor for free. My goal is to personally mentor. I know I'm taking 20, but I don't think 20 is going to make it. I don't think 20 is going to really make it. My goal is to make 5 6-figure traders in 2023. And then in 2024, we're going to set a whole new set of aggressive goals. But my goal is 5 6-figure traders in 2023. I want to help 5 people become 6-figure traders in 2023. And I look forward to doing that for free. Absolutely free. So I don't want anything in return. Don't really care. I don't care if you ever give me a shout out or not. Just want to do some things to help the community get a little better. And so I look forward to seeing all of you soon. I'm going to hop off because it's been kind of crazy here with the tornadoes from Thursday. It's kind of madness in Central Alabama last couple of days with the cleanup efforts and things like that. And shout out to anybody and everybody that has come to the communities near us. Marbury, Alabama, which is about 10 minutes from us, got hit really hard. I think there were 9 total deaths in our neighboring county, Talker County. It's been a pretty rough couple days, but I hope you guys have a blessed day, and I look forward to seeing you guys soon and doing all I can to help you guys become successful traders. Be blessed.